Hi, I'm Dominic Picarda here for Investors Chronicle and Naked Trader today to look at the market for gold. Now, I'm a big bull of gold. Clearly, it's in a fantastic long term uptrend, which I believe is going to continue. I see this stuff heading for $2,000, and frankly, I see that as a conservative estimate. I think gold could go very much higher in the medium to long term. But right here, right now, I'm a lot more cautious, and and here's why. Because we have had in the last few weeks, since early July or so, a fantastic run up in gold, and that has left gold a little bit overbought on a very short term view. Down here at the bottom, this is the daily relative strength index, and gold has already registered an overbought reading on the daily chart and has pushed on to new highs. And now this indicator is not actually confirming the move to new highs. That's always that is always a danger sign, always an alarm bell to show that this trend may, in the near term, be about to reverse. And that isn't it, because timing factors are also telling me to be cautious about gold right now. The red line that you can see here on the screen, this is a 34-day cycle which exists in the price for gold. And what we're saying here is that every 34 days or so, there's a tendency for gold to form a turning point. And you can see that it's picked out quite successfully some of the areas of major highs and lows this year, and going back further still. So this is a good way of spotting short-term turning points in the gold, and we are heading for, or we are now in the vicinity of a potential turning point in gold. Right up here, around the present date, and this is pointing to weakness in the gold market in the coming weeks, or at least the potential for a correction. That may be a sideways correction, or it may be something a little bit more severe. One way or the other, the cycle is calling for a turning point at around about now. There's another reason, timing-wise, why we want to be careful about gold right now. And that is seasonality. This blue line down here at the bottom of the screen, that shows the seasonal pattern for gold at the various times of year. And we are just entering now what has been traditionally one of the weakest phases for gold in the calendar, the late July, very early August period. So we have a massive seasonal headwind, if this is to be believed, facing in the next couple of weeks or so. Combined with the overboughtness, combined with the cycle, these things make me short-term cautious on gold. Now, I'm not thinking about going short of gold. I think it's in far too strong a bull market for me to be interested in doing that. And plus, there's clearly a flight to quality going on at the moment, thanks to the crises in the Eurozone and especially the ongoing US debt situation. What I'm really looking for now, it would be really nice if we did get a pullback going into August, maybe early August, around that 4th or 5th of August date, or maybe when the cycle is suggesting a little later in the month. And if we get lows or around either of those two dates, and the market begins to rally, then I'll definitely be looking to establish a major long position in gold. Remember that September is an absolutely fantastic month for gold, and that's the sort of time that I want to be long of this market, especially if we're coming off some sort of lows around that. And you can catch my analysis on gold on www.investorschronicle.co.uk pretty much every day this week. So this is me signing off.